Now near its all-time high set just over 5 years ago. Is it time to get out of stocks? Let's ask Robert Luna, CEO of SureVest Capital Management, and Yu-Dee Chang, Chief Trader at Ace Investment Strategist. Yu-Dee, we brought you here today to rain on this rally. You think it's time to actually sell out of some of this?
Well, I think on a shorter-term basis, till the end of the year, it is. The markets, good, bad, or indifference is good, but uncertainties are not good, with questions on Europe's ability to deal with debt crisis, with the slowing down of China, and with U.S. looming fiscal cliff. I'm telling you, how much more can you really have until the end of the year? So right now, I think it's good to be cautious and take some cash off the table and keep your powder dry and get ready for this uncertainty to be over before jumping back in it again.
Okay, Yu-Dee, what percentage of my stocks should I sell to move into cash?
Absolutely. For us, when we look at history, right now we're about 40% invested out of the so-called 100% that I would invest. So that's what I will do. We started to get out of the market already in the middle of September. We believe right now it's time to be cautious.
Robert, the Frady cats have been warning us about all of these things that go wrong, and stocks just keep climbing. What do you say?
Yeah, Dennis, I think what our other guest is talking about there are all things that have already been well known by the market. The fiscal cliff isn't anything new. Europe's been in the headlines for over 2 years right now. And like you said, everybody's been talking this market down. And I think the reason is most people, if you look at active managers right now, are underperforming this market. And you see that. We're in a bull market. Every time we have a pullback of 2 or 3%, the market starts to rebound right back up again. That's indicative of a bull market. If you look at where the big money is right now, pension funds, endowments, the average retiree portfolio right now, they need income, they need returns. Cash is paying nothing. CDs are paying nothing. Right. Government bonds are next to nothing, and now they have embedded capital preservation risk out there. Right. Stocks are one of the best asset classes out there for investors to be in.
Yu-Dee, startling little fact. It turns out that as of September, if you look at the returns over the past 10 years, stocks reinvesting dividends up 8% per year, cash 1.6% per year. Aren't I going to be mad at you, Yu-Dee, if you put me into cash?
Yeah, absolutely so. That's exactly my point. We're in the bull market. What are you talking about here? We're actually in the bear market since the 14th of September. We're in the bull market since 3 years ago. We're in the flat market since 12 years ago, right? So it all depends on the time frame. That's what we're saying. For the short-term basis, there's just too much uncertainties in the market. The guess I'm talking about before the end of the year. You're talking about the fiscal cliff. I don't know. There's actually, to me, there's more than one cliff. There's several cliffs, actually, from cliffs to slippery slopes to maybe a mild mount. So we don't know exactly what's going to happen. The slowdown of China. Everybody's dismissing it. I'm telling you, I was just there a month and a half ago. It's going to be a little bit worse. I don't think we're going to go into a recession, hard landing, but I do expect a little bit more of slowdown in China, which is going to affect this world market as well.
Yet, Robert, stocks are still on a price earnings of multiple basis. They're still, I think, 20 or 30% cheaper than their average over the last 20 years or so, aren't they?
I mean, that's exactly it. If you look at forward earnings and what the projections are next year, stocks still are not inexpensive. And when you compare that to the risk-free rate, historically, they're very cheap right now. So the idea is if you are an equity investor, this is the type of setup that you're looking for. If you're trying to time the market for a 3 to 5% pullback, that's a pretty slippery proposition. Yeah, China is slowing down. I think they came in 7.5% growth today. A lot of that has been the infrastructure and real estate build out that they stopped a few years ago, and you've seen that play out in the discretion in materials, in industrials. But if you look at actually the charts now on industrials, materials, take a look at Deere, take a look at Freeport-McMoRan. The charts look pretty good even on those laggards right now. Okay. So if we look across the the broad spectrum, the market looks pretty good to us right now.
Right.
But if you don't time the market on a 3 or 5 month basis, what? You would time it on a 3 or 5 year basis? Because if you had invested on a 10, 12, 15 year basis, like you just said, you have absolutely gotten no return. In the meantime, how many drawdowns would you have to endure?
So
basically,
yeah, I mean, the facts are you got to trade the market that's in front of you. And this market's going up. It's been going up for 3 years. Whether or not that's cyclical or secular, ask me in 2 years, and we'll both be able to come up with the right answer.
I mean, Yu-Dee, everyone was telling us to sell, sell, sell in March 09 when the Dow was 6,800. I didn't sell. I didn't lose. I'm all the way back up 90%. Why not just hold on to your stocks? Why dip in and out like some little fraidy cat?
Well, truth of the matter is, we're talking about like not in the overall picture. It's really depending on which sector and depending on which time frame you're talking about. Like even when I'm short term, not as bullish on the market, I think on the overall basis, I do agree the fact that the market for the past 3 years has been uprise, right?
Okay.
So we've had about 12 downward corrections, averaging about 7.5%. We're not talking about 1 or 2% here.
Okay.
The worst.
A last quick question for the two of you. Robert, Luna, which happens first, Dow 10,000 or Dow 17,000?
Dow 17,000 for
Yu-Dee,
sure.
which happens first, Dow 10K or Dow 17K?
Dow 17,000 first.
I'm sorry, say it again.
Dow 17,000 first as well.
All right, so you came over to our side, babe. Thanks so much. Robert Luna and Yu-Dee Chang, a very spirited conversation. Nice job, guys.
Thanks, guys.
Thank you.
Well,